Welcome back to United Real Estate Capital Corporation, home of the no hassle quote. So this block of instruction is going to be on how to select the interest rate that's right for your situation for whatever it is you're doing. Here is where the interest rates are sitting at right now. You'll see they go as low as 2% and on up to 3.875%. You might see a couple outliers, like maybe one lender at 1.75% and another as high as 4%. But in general, this range of rates, 2 to 3.875%, are where most of the lenders are sitting at today. We all have this same range of rates, all of the lenders. The difference is what we charge in fees for the various rates. For example, if we have a 2.5% rate, Quicken Home Loans has a 2.5% rate, Chase, Wells Fargo, Loan Depot, your credit union, we all have that same 2.5% rate. The difference is what we charge you to get that 2.5% rate. It's the fees that you're actually shopping for, not the interest rate, since we all have the same rates. So since it's the fees that you're shopping for, let's take a minute to talk about how the interest rate pricing works. So generally, the lower the interest rate, the higher the fees. The higher the interest rate, the lower the fees. For example, on this chart, 2%, let's say on a $400,000 loan, 2% would probably cost about $16,000 to $19,000 in fees, depending on where you're getting the loan from, the lender. On the other end of the spectrum, the 3.875% would have no fees, and you would get a credit, probably of about $15,000 to $17,000. In the middle of the pack, in the middle of the spectrum, that's where you're going to find the 0 points rates that are really popular, and the no cost rates right in the middle of the pack. Now, it might seem odd to have rates on the extreme end of the spectrum, like the 2% and the 3.875% rates, but they all serve a purpose. So example, the 2% rate, let's say on a $400,000 loan, if you were going to be living in the house for a long time, let's say 20 years, the 2% rate on a $400,000 loan would cost you about $84,000 in interest you would pay over that 20 years. So compare that to the, say, 2.875 rate. Say the 2.875 rate is no cost, but you'd pay about $127,000 in interest. So I think that's about $44,000, $43,000 difference in interest. So if you were to subtract the closing fees you paid for the 2% rate, that's a net savings of about $24,000. So even though the 2.875% was no fees, the 2% rate saved $24,000 more. And on top of that, the monthly payment on the 2% rate would probably be about $180, $170 cheaper. So nearly $200 cheaper per month. That $200 can go towards whatever, groceries, gas, whatever it is. It's a nice savings per month. So in the middle of the pack, a no-cost loan, that would come in handy, say, for somebody looking to sell their home. Like, say you're going to move, and within, say, 6 months to a year and a half, but you just don't know exactly when. But interest rate pricing is down, so it's actually a good time to refinance. You could use a no-cost loan to refinance because you're not sure when you're going to sell. So for example, let's say if you were to pay closing cost on an interest rate, let's say you paid $1,000 in closing fees, and the loan saved you $100 a month. If you were to sell the home in, say, 3 months, you would have only saved $300. You wouldn't have made back that $1,000 you paid in closing costs. So in other words, you have to live in the house long enough to recoup the closing fees that you paid. So that's where a no-cost loan would come in handy. It wouldn't matter. You could sell the house in a year. You could sell the house in a month. You had a no-cost loan, so it works out perfectly. So that's the 2% rate for long-term savings. The no-cost one in the middle, say if you're going to move. Now on the high end of the spectrum, even the 3.875 could serve a purpose. Like say, for example, I want to do a little investing, and I purchase a home that I'm going to flip in a year's time. So normally you have to put down a down payment, and you've got to pay closing fees and prepaid items. So say if you're purchasing a home, say in California, a $450,000 a home, your prepaid items, closing fees and the prepaid items like taxes, insurance, etc., that could cost anywhere between $11,000 to say $14,000. Well, if you do the 3.875 rate, that credit would take care of the closing costs and all of those prepaid items. All I have to do is make that down payment. I don't care about being exposed to the 3.875 interest rate over 12 months. I care about the return on investment. Like say, for example, I'm going to make $26,000 when I flip the property. So that's where the 3.875 rate could come in handy. So there are no bad rates. Depending on your scenario, one or maybe two or three of these rates would work good for your situation. Now, I know I'm showing you all of these rates, but when you're shopping for a home loan, you generally only see one rate, right? That's because the lenders can advertise whichever rate they want to. They can select between the 2% up to the 3.875%. You'll generally see them choosing a rate that's right in the middle, either say the 1-point rate or a no-cost rate or a half-point rate. They're going to advertise something that they think is going to appeal to the most people so they can get more new business coming in. So again, there's no national mortgage rate. There's maybe an average of what the lender's charging, but there's no type of national mortgage rate. The lenders can advertise whatever it is they want to make their company look attractive. Now, unfortunately, when you see those advertised rates, just to give you a heads up on this, I've been doing this for 23, 24 years, and it's my experience that many, if not most people, don't qualify for that advertised rate. The reason why is because most people don't know about pricing adjustments. Things like the size of the loan that you're doing, the amount of equity you have, your credit score, whether you're taking cash out or not, those things impact the interest rate pricing, and in many cases drastically impact the interest rate pricing. So that wonderful rate that you see, there's a good chance you don't qualify for that. But thank goodness there are laws, something called the Truth in Lending Act. Lenders are required to disclose to you the terms and conditions necessary to qualify for that advertised rate. They're also required to show you the annual percentage rate, or APR. So if you're shopping online and you see an advertised rate on a lender's website, what you want to look for is the Disclosures tab. This Disclosures tab will usually be located somewhere in the vicinity of the advertised rate, maybe off to the left of it, maybe just below it, but look for that Disclosures tab. Click on it. That Disclosures tab will take you to a page that shows you the terms and conditions necessary to qualify for that advertised rate. Because if you don't meet those terms and conditions, your pricing is definitely going to vary. So don't forget, when you go on there, click on that disclosures link and see if you qualify for that advertised rate. The next thing is the APR, the annual percentage rate. So I'm going to show you how the APR can be used to determine the fees associated with the advertised rate. So the higher the APR is above the advertised rate, indicates fees added into that rate, or I say fees associated with that rate. For example, a 2.5% rate with a 2.5% APR indicates there are no fees associated with that rate. A 2.5% rate with a 2.99% APR indicates fees associated with that rate. And in this case, quite a bit of fees, because the APR is considerably higher than the advertised rate. So that's how you can use the APR. Now you'll see the APR typically right next to the advertised rate, or maybe right below it. And in some cases, the rate and APR are the same. Lenders are allowed to advertise like that. For example, they might advertise 3.125% rate and APR. So look for that, and that'll give you an indication of fees added into the rate, or I should say associated with that rate. So when you are shopping or talking to the loan rep, have them show you options. With all these rates available, one or more of these are going to work best for your scenario. So instead of calling the lender up and asking, what is your rate, which of course doesn't really make sense now that I've shown you what I have so far, it's not a complete question, you can see, because there's so many different rates available. So have the loan rep show you more than just one option. Don't be satisfied with just going with the advertised rate or whatever it is they want to show you. Have them show you several scenarios, or as many as you need to make a good decision to get the pricing that works best for you. Now, some people, or many people, don't like working with the reps like that, because they feel the rep is going to steer them in the direction that makes them or the company the most money. But you can rest easy. When you have a moment, go online and look up CFPB, Loan Originator Compensation Rule. So it's CFPB, Loan Originator Compensation Rule. You'll see the Consumer Financial Protection Bureau's website show up. Make sure it has that .gov on the end of it. So click on that, and you could read about the Loan Originator Compensation Rule. The Bureau enacted this rule in 2013. So what this rule does is it prohibits loan originators, people like myself, from making money based on certain terms like the interest rate, or the closing fees, or the type of loan. You could pay $20,000 in fees or no fees at all. We get paid exactly the same. It doesn't matter what type of loan you choose, or the fees you pay, or the interest rate that you choose. So you can focus on getting something that works best for you, and not worrying about if the lender is trying to rip you off or not. So stay focused on getting the options and getting the rate that works best for your scenario. Now, I understand you may run into some people or some reps that don't want to take the time to show you this information, or they might maybe rush you off the phone or something. Don't deal with them. Go to another company. Come to United Real Estate Capital. We are home of no hassle quote. You can get the interest rates, the closing fees, monthly payments, everything associated with the rates on as many rates as you want. And there's no credit check. There is no disclosure of personal information. There's no talking to a pushy salesperson. And there's no spam email or phone calls afterwards. You can just pop online to UnitedRealEstateCapital.com, click on the no hassle quote, and we will send you out all the information you need. Then if you like what you see, you can contact us, and we'll be happy to show you as many scenarios as you'd like to see. So please make sure to hit the notification bell and subscribe, because we've got some more videos on the way with some accurate and helpful information. videos like details on shopping for a home loan, down payment assistance loans, FHA loans, VA loans. So come back and visit UnitedRealEstateCapital.com. Subscribe, hit that bell notification, because we've got some more good stuff coming at you. Thank you for considering UnitedRealEstateCapital.com.